Inflation has been a blazing hot topic right now, and for good reason. The annual inflation rate rose to an alarming 6.2%. That's the highest it's hit in over 30 years, which is a huge jump from the mere 2% that we've enjoyed for the past 5 years. Now, with inflation appearing to be rising, many real estate investors are wondering what this means for real estate and their current assets. Look, with consumer prices rising by the day, what effect does this have on real estate, you ask? Well, in this video, we'll share exactly what is the impact inflation has on real estate. Take a few seconds and subscribe to Life of a Landlord, where real estate investors go to level up their journey in real estate investing and owning rental properties. Make sure to ring the bell so you don't miss out. Now, inflation has many real estate side effects, generally including higher mortgage rates, increasing home prices, long-term debt, and construction gets more expensive and plenty more out there. Let's take a closer look at the role of inflation on real estate assets, mortgages, and how investors can position themselves in a high inflation environment. But first, you need to ask yourself, what is inflation and what causes it? Simply put, inflation is when the prices of goods and services rise, thereby decreasing the purchasing power of the money you have to spend. Right now, several factors are contributing to inflation. First, consider the impact of government aid during the COVID-19 pandemic. As the government supported American households and provided financial assistance, that gave many people more purchasing power. But a lot of Americans could work remotely and didn't need to spend on takeout lunches at the office, commuting and parking, or any other miscellaneous expenses. So companies on the supply side of those goods and services needed to charge more since they had fewer customers. As the number of transactions dropped, business owners raised their prices to stay afloat to make ends meet. Another factor contributing to inflation today, the supply chain issues occurring around the globe. Manufacturing was disrupted due to the pandemic, as illnesses and lockdowns slowed business, and there continue to be problems with goods getting into ports. There is also worker shortage we have to deal with. Companies are raising wages to address that, but also consequently they have to raise prices. So if a bathroom sink might normally sell for $100, when you have to pay your workers and drivers more, the manufacturer must raise prices to offset that. One thing you need to know is, how does inflation affect home prices? Now that you understand why prices are painfully high, let's consider how that affects home prices. Even before inflation started rising, the housing market has been tight, with prices and rents climbing. Brace yourself, because things are not heading in a more affordable direction anytime soon. You see, inflation fuels the housing demand supply, which means even higher prices for housing. People think we need a hedge against inflation when housing has traditionally been a long-lived and durable asset. The more people jump into the housing market, the greater the demand, the lower the supply, and the higher the prices go. The air is already thin on this front, with home sales and median rents reaching record highs this year. You also need to know that inflation can lead to higher mortgage rates. Now, on the other hand, if interest rates are low, more consumers tend to borrow, which means they have more money to spend. This moves inflation even higher. As central banks raise interest rates to fight off inflation, consumers will tend to save more rather than spend, because returns from higher interest rates are more appealing. The hope is that with less consumer consumption, inflation will ease, but the bottom line, try to expect mortgage rates to steadily increase as inflation rises. Now, also, you need to understand that inflation can lead to higher asset prices. As the price of things increases with inflation, so too does real estate. Generally speaking, when inflation increases, then housing and other real estate asset prices follow suit. With that said, because we also see mortgage rates rise, this tends to put downward pressure on demand for real estate because debt becomes more expensive. This can in turn put downward pressure on asset prices and demand decreases. Now, one thing you may ask yourself, what does inflation mean to home buyers and sellers? There's no doubt that strong inflation will affect home buyers' budgets. The majority of buyers tend to finance a home purchase, which means they need a down payment and then must apply for a mortgage. Now, assuming they have a down payment, the mortgage payment will be a main factor of what they can afford, and mortgage rates tend to move in tandem with inflation, thus mortgage rates will rise. The Fed has been a principal purchaser of mortgage-backed securities, but that will wind down by April of 2022, which drives rates even higher. By late November, Freddie Mac rates went up to 3.10%, meaning that today's buyers of a median-priced home will spend $160 a month more on their mortgage payment, which is a noticeable impact. Also, for home sellers, the current tight market can be a good time to reap a profit, provided that post-sale, they can find somewhere affordable to move. If the house you bought for $200,000 is now worth $300,000, that's perfect, but if you sell and want to stay in the area, can you afford to buy what you want, or has inflation evaporated your spending power? It's an important question to ask yourself. One thing you also need to realize is that inflation increases long-term debt. Your existing debt becomes cheaper as inflation increases. Consider the following example when it comes to racking up debt. 5 years ago, you bought a property for $125,000 with a $25,000 down payment. You have a 25-year, $100,000 mortgage at a 3% fixed interest rate. Assume that inflation increases 3% every year. Each year, you're still only paying $475, but the value of your money has gone up 3% every year. Therefore, the relative cost of your debt goes down every time inflation hits. Look at that as a prime example of how inflation can determine exactly how much you spend on your mortgage the next time you buy a house. One thing you also need to understand is that inflation causes construction costs to rise. Because things get more expensive with inflation, the cost of materials used in construction will also rise. There's a lot that goes into real estate development, and all of those prices will generally increase as inflation creeps in. Now, it is widely understood that inflation causes wages and building materials to rise. It also puts developers and investors in a scenario where cost overruns are much more possible. If you plan to build several years ago in an inflationary environment, your costing will need to account for the inflation of all the building materials and labor. Now, when it comes to the type of real estate you own, the good news for investors with single-family homes, condos, and multifamily in their portfolios is that these asset classes tend to outperform in inflationary environments. According to a Stanford University study, residential real estate is historically an investment safe haven during inflationary periods. In the study, they found that with the inflation of the 1970s, home prices increased relative to the size of the economy. Owners of residential and commercial real estate are often better off during times of rapid inflation than owners of stocks or bonds, and know that office, retail, and apartment rents are typically tied to consumer prices and rise with inflation, pushing up property income as an investor. Inflation also makes construction more expensive, which benefits property owners because they can expect less competition from new buildings. Now, as a landlord, the beautiful thing about inflation is it allows you to charge higher rents for your rental properties. Studies have shown that historically, high periods of inflation also saw a similar increase in rent prices. According to a recent study, during the high inflation period from 1973 to 1983, rents grew slightly less than overall inflation, but slightly more than core inflation stripped of food and energy. The median rent increased by an average annual rate of 8.5%, which exceeds all measures of inflation. The risk for investors is not just increasing rents to keep up with inflation or to prepare for higher than expected inflationary pressures. Just think about it: if inflation rises 3% every year and you don't raise rents, you're taking a loss that is compounded over time. Okay, so how long will inflation last? As inflation eats away at homebuyers' spending power, many may be wondering, when will things get better? My prediction would be most places will see higher prices for housing as we untangle supply chain issues. People had been shifting from spending on goods to spending on experiences, going to the gym, dining out, or maybe taking a cruise. COVID-19 totally reversed that. Who wants to go to a restaurant or movie during a pandemic? But if things shift and we do spend more on services, that will help untangle supply chain issues. Also, there will be less demand for goods at bottleneck ports. Once that happens, inflation should abate and allow home buyers to return to their pre-pandemic budget. Now, the other big question that will affect the real estate market is where mortgage interest rates go next. A lot of that depends on what steps the Federal Reserve takes. The Fed is on record stating the 30-year mortgage rate could rise to 3.7% by the end of next year from the current 3%. As a result, some buyers will no longer qualify for mortgages at higher interest rates. They will have to either take their spending down a notch or sit on the sidelines for a while as the market becomes too pricey. For home buyers who have extra cash on hand, This will be a good time to jump into the market as they look to hedge against inflation during this moment when money isn't going as far as it used to. Now, I hope this video has given you a grasp on inflation in our economy and how it can seriously affect every phase of real estate. To make sure you stay up to date with all of your real estate needs, don't forget to subscribe to Life of a Landlord and hit the like button down below to help support the channel. Since we've spent a lot of time sharing how inflation can affect loan interest rates, watch this video here that will tell you exactly what to expect going forward. And until next time, we'll see you guys in the next video.